Hi everyone, welcome back to our channel. Today we're diving into some major developments in the tech and finance world that you don't want to miss. From OpenAI's potential clash with Microsoft to groundbreaking legislation on cryptocurrency. Let's get started. First up, we have some intriguing news about OpenAI and Microsoft. Reports suggest that OpenAI is considering an antitrust complaint against Microsoft, its key investor. This could escalate tensions in their AI partnership. The complaint alleges that Microsoft is using its cloud dominance and contract terms to stifle competition. At the heart of this dispute is OpenAI's plan to restructure into a public benefit corporation, which requires Microsoft's approval. OpenAI aims to reduce Microsoft's future equity stake and exclusive hosting rights, which could threaten one of the most significant alliances in the AI sector. Next, let's talk about cryptocurrency regulation. The US Senate has just passed the bipartisan Genius Act with a vote of 68 to 30. This bill is a pivotal step in federal cryptocurrency regulation, mandating that stablecoins be fully backed by US dollars or liquid equivalents. It also requires annual audits for stablecoin issuers with a market cap exceeding $50 billion. Treasury Secretary Scott Bessent believes the stablecoin market could reach a whopping $3.7 trillion by 2030. The bill now heads to the House, with President Trump pushing for final legislation by August. In other news, BlackRock's iShares Bitcoin Trust has quickly become the second largest holder of Bitcoin, amassing over 662,000 Bitcoins, valued at more than $72 billion in just 341 trading days. That's over 3% of Bitcoin's total supply. This aggressive accumulation positions Bitcoin as a strategic reserve asset for institutional portfolios, but it raises questions about the asset's decentralized ethos. Now let's shift gears to JPMorgan Chase, which has filed a US trademark for JPMD, hinting at a potential stablecoin launch. The application outlines services for trading, transferring and setting digital assets using blockchain technology. This move expands JPMorgan's leadership in digital finance, especially with its existing JPM coin processing $2 billion daily. It signals a new phase of institutional adoption in a more favorable US regulatory environment. Finally, let's talk about artificial intelligence. A new study led by University of Florida finance professor Alejandro Lopez Lira shows that AI systems like ChatGPT, DeepSeek, and Grok are outperforming human analysts in stock picking. Simulated portfolios built by ChatGPT-4 produced returns exceeding 650% over 2 years. This raises existing questions about the future of investing. Next, let's take a look at the economic indicators for this week. Core retail sales for May unexpectedly dropped by 0.3%, while the forecast was a modest 0.2% gain. That's a sharp turn from April's flat reading and suggests consumers are pulling back on non-essential purchases. Discretionary demand is clearly under pressure, and that's never a good sign for the economy. Retail sales overall also fell, down 0.9%, almost double the expected decline of 0.5%. This broader pullback reflects a more cautious consumer, possibly reacting a persistent inflation and tighter credit. Export prices fell by 0.3%, even though analysts expected a slight rise. This could mean weakening global demand for US goods or lower pricing power for exporters. Even more striking, import prices dropped 0.9%, a much steeper decline than the expected 0.1%. That might sound like good news for inflation. Cheaper imports could relieve some price pressures for consumers, but it might also hint at slowing global trade. Initial jobless claims came in at 245,000, slightly better than expected and down from last week's 250,000. It's a small improvement, but it shows the labor market is still hanging on, even as other sectors show signs of stress. Now here's a shocker. Crude oil inventories saw a massive drop of 11.5 million barrels. Analysts were only expecting a 2.3 million barrel decrease. This could mean refineries are cutting demand, or there's an oversupply situation brewing. Either way, it could put downward pressure on oil prices in the near term, something to watch if you are invested in energy stocks. The Fed kept rates unchanged at 4.5%, exactly as expected. No surprises here, but it does reflect a wait-and-see approach as the economy sends mixed signals. Inflation's still sticky, but growth is starting to wobble. Lastly, the Philadelphia Fed Manufacturing Index stayed at -4.0 in June, down from the forecast of -1.7. That's another red flag for regional manufacturing, with businesses clearly still facing challenges. Next week, market attention will be focused on key economic indicators and earnings reports, including CB Consumer Confidence, S&P Global Services Manufacturing PMI, new home sales, initial jobless claims, and quarter-on-quarter GDP. Meanwhile, several major corporations are set to release their earnings reports, including FactSet Research Systems, Commercial Metals Company, KB Home, FedEx Corporation, Carnival Corporation, TD SYNNEX Corporation, BlackBerry Limited, Micron Technology, General Mills, and Nike. That's all for today's news roundup. How do you think this economic picture will evolve over the summer? Make sure to drop your thoughts in the comments below. Don't forget to like, subscribe, and hit that notification bell for more updates. Thanks for watching, and we'll see you next time.